Simon, your live.
Okay, welcome everybody. Welcome. Great to be live again. Can't believe it's been another week. What a week it's been again. Another week in crypto. If you are joining us live, we're going to be doing an AMA. The first half of this, we're going to be discussing a topic we were meant to cover for a long time, but each week a new topic came along. So we've revived one of the old topics on corporations buying Bitcoin and what it means for Bitcoin. And what a week to do it. Now that Tesla's purchased $1.5 billion of Bitcoin and tried to warn the world about it when Elon Musk changed his profile to #Bitcoin and tweeted out #Bitcoin. So it's been a really, really wild ride. But how does it feel to front run the largest corporations in the world and Wall Street for probably the first time in history? You know, if you've been watching my channel for a long time, then obviously you would have front run the Wall Street and all of the large institutions. And as they're all scrambling to get involved in Bitcoin right now, it's very easy for individuals to get on Bitcoin. It's very hard for corporations. So this has created a really, really interesting asymmetric opportunity where the individual wins. And what a week to do that as well. With if you watched my YouTube channel, I uploaded an interview that I did on the Orange Pill podcast with Max Kaiser and Stacey Herbert on the GameStop situation. What a wild week that was as well. Also, I tweeted out the Sunday Times podcast that I did where we went through the GameStop situation, and full disclosure, as a shareholder in Robinhood, an early investor, as opposed to someone that uses the app, I was discussing the Robinhood situation. So we're going to be discussing the effect on Bitcoin of corporations buying Bitcoin. So what I'd love for you to do right now, if you're watching the live, use the live chat. Let me know what questions you got for me. Azad is back. Azad has had a few weeks off, and he's really happy to be back. So he's going to be moderating as usual. And in the second half, he'll be picking out your questions. So if you're on the live chat, say hello to us. Let us know where you're tuning in for, and let us know what questions you got for us. And also a great way to help us out. We've gone from, since we've been doing these weekly broadcasts, we've gone from 6,000 viewers to over 60,000. So I really help and appreciate your support getting us there. So anyway, let's jump in. So please do like, please do share, please do subscribe, and we'll give you more and more content just like this. Hit the subscribe button, hit the bell symbol, hit all, and YouTube will make sure that you don't miss anything, because things are moving fast. So as I said, the really interesting thing about Bitcoin is that it went in reverse to all other financial markets. So I'm an investor in private equity, and the way it normally works is the venture capitalists get in first, and then they dump their stock onto retail when the company goes public. And if the company continues to grow after it goes public, then retail get to actually purchase those shares, and they're put into your pension from the institutions. And hopefully, if the government and the Federal Reserve and the central banks around the world keep pushing us away from a free market where they just pump funny money through quantitative easing and lending it at virtually 0% interest rates to corporations that want to buy it to buy back their stock, then the world's largest regulated Ponzi scheme called fiat currency has a wealth effect on those 401ks, on those pension funds, and on the stock market in general. And hopefully you get some of that action as well. But the difference with Bitcoin is that Bitcoin did everything in reverse. So the early adopters of all technologies are normally criminals. They're the ones that have to be on the largest part of innovation. So that was no different with Bitcoin. As people started to realize that when you can own your own money, when you can spend your own money, it might be good for crime. And so people started to use it to do things that like purchase drugs that some people would consider a crime. Other people would consider the fact that it's made illegal makes it a crime, and that's what makes it so violent. If they would just legalize it, as we see in other countries, then maybe it wouldn't be such a violent industry. But instead, peaceful people were able to purchase drugs online, take it off the street, reduce the gang-related crime caused by making it illegal, and purchase online, and Bitcoin was a tool for doing that. So the criminals were in first, as it always happens with new technologies. But then individuals, as people started to realize that actually Bitcoin has still got its stigma around it, but it's a pretty bad currency for committing crime, because once you have a record and they can try and connect your identity through centralized institutions to certain wallet addresses, then you have no plausible deniability because you have an immutable record of all your transactions on the blockchain. Obviously, Bitcoin's working more and more on privacy enhancing features to allow certain different features which are coming through as the market evolves. But later really became individuals, freedom fighters. When I spoke at the very first Bitcoin conference in the US, it was a mission of geeks versus the banks. And we were all talking, and I was the first investment banker. I left my career in investment banker to start Bank to the Future, so that we could discuss the difference between Bitcoin and banking. Trying to create a non-fractional reserve bank, and Bitcoin seemed like a solution. And so the geeks and the individuals and the technophobes, sorry, not the technophobes, the techno cypherpunks, all got into Bitcoin before everyone else. Unfortunately, many people were using it as a medium of exchange, so many of those early people never made it through the whole way. If you have watched my 4-part free video series on retirementplanb.com, you'll understand some of the mistakes that the really early people did and how to prevent it as we start to move for the next phase of adoption in Bitcoin. But next really were the individuals. And so the individuals came along. And this was round about the time when I was going around presenting to all the money managers in the world and people that were managing the vast amount of money, and telling them about Bitcoin, because at that time, the banks were all saying, hey, forget about Bitcoin. We can use the technology behind Bitcoin. The technology behind Bitcoin is the real innovation. Let's not talk about Bitcoin. Let's talk about blockchain. And so they invested billions into blockchain and tried to get the world to talk about blockchain. And everyone started investing in blockchain, and all the corporations were having a blockchain strategy and blockchain this. 5 years later, what was that, 7 years, 2013, that was around that time, the whole blockchain trend, Bitcoin not blockchain thing started to come around. In fact, I created a video on my YouTube channel, banks, Bitcoin not blockchain, I think was where I was presenting to all the bankers on the Bitcoin's the real innovation. And they were trying to laugh us out of the room. You know, blockchain was where it was all at. Blythe Masters, the inventor of the credit default swap, the product that virtually destroyed the financial system and everything around it, that led to all of us having to give our money to banksters and bail out the financial system.
Simon, this is Azad. I think your screen is frozen, so we're having slight technical difficulties. A few people have mentioned.
Okay, I'm back.
Okay, that's good. Thank you.
Let me know if that happens again, and I'll just reboot the camera. I don't know why that's happening. So where were we? Yeah, then we had the blockchain, and corporations were all about, no, I don't want to buy any of that Bitcoin stuff. That's that currency just for drug dealers. Forget about the fact that the utility of owning your own money, spending your own money, and having a fixed money supply against the regulated Ponzi scheme called dollars and pounds and euros. We want some pounds and dollars and euros, and we want some blockchain. We want the technology behind Bitcoin. And so corporations' first move was investing all of that money. Imagine if they took that money that they invested into blockchain and put it into Bitcoin. Maybe they would have some really great reserves during this pandemic when all these businesses had to go into lockdowns, and maybe a hedge against all those retail businesses that had to really change their model. I'm going to put the camera on and off. Don't know why we're having an issue, but I'll keep doing that. And then, so the corporations didn't do it then. What they seem to have been waiting for is for everyone else to tell them that it's okay to do it. And so just like individuals have this fear of missing out, FOMO, every time the price goes up. And all of a sudden, all my friends that I was trying to tell them that, by the way, you should probably have a bit of Bitcoin. And all the corporations, and I was saying, yeah, you should probably have a bit of Bitcoin. And all the fund managers were saying, yeah, you should probably have a bit of Bitcoin. There's no yields out there. There's no returns out there. Bitcoin is sucking up more and more of the industry due to the trends. They all wanted blockchain. And so, oh, let me get the camera back up. Yeah. And so that really brings us close to where we are now, where the problem with Bitcoin is that it was really built for you to own your own money and for you to spend your own money. But that creates an interesting challenge in an organization or a corporation, which is that you really have to have some kind of treasury management process, because you can't have these rogue people in the company owning the money of the company. And so you need different types of services to allow for organizations to have multi-signature transactions where it's not just one person that can sign a large financial transaction. You have to have a whole due process for that to happen, because an individual owning the corporation's money could run away with the private key. And so this created one of the most interesting challenges in history. So when I went around and spoke to all those fund managers, they were like, well, thanks for telling me about Bitcoin, because Blythe Masters was telling me about blockchain. And so they made a few bets on blockchain, but they couldn't put any Bitcoin in their fund. And they were talking and asking me, well, how do you do it? So I said, well, it's actually about the individual owning their own money and the individual being able to spend their own money. So they all went out and bought Bitcoin as individuals, but they couldn't figure out how to put it in their fund. And this is where many of the companies that we ended up investing in, or I ended up investing, like Coinbase and many of the Bank to the Future investors, and other types of large companies that are now multi-billion-dollar organizations like Circle and everyone, they started developing the infrastructure to allow for institutions to get in. But it was taking such a long time because it was a very, very hard problem to solve. How do you have it where you can't run away with the funds, because this was built for individuals to own their own money? Corporations can't have bearer assets that you could own. And so the infrastructure was gradually built. And then you had players like the largest fund custodians in the world, like Fidelity, that are managing trillions and trillions, that decided, you know what, it's not blockchain, it's Bitcoin. And Fidelity really shifted the gears and said, Bitcoin's the one that we want to build our infrastructure around. And then more and more people started to take it seriously. We had a few, like PayPal tried to get in early. Elon Musk, one of the co-founders of PayPal. In fact, some people speculate that Elon is Satoshi, because at the very same time that he got ousted of power because of his argument with Peter Thiel, because Peter Thiel believed that the future was artificial intelligence and control, and Elon Musk had a different philosophy in the world. Let me change that camera. And Elon had a different philosophy in the world. He believed that artificial intelligence was dangerous. And so he was ousted out of PayPal. And that was around about the time that the white paper was launched. It's very interesting timing. We'll leave the speculators to talk about that one. I first heard this theory on more recently on the Chico Crypto channel. So shout out to Chico Crypto for that interesting theory on Elon and the timing with PayPal. But PayPal had a few adventures in trying to get involved in it. We had companies like, I guess the first corporation, maybe you call it a decentralized autonomous organization, was WikiLeaks, when the financial system blockaded WikiLeaks. Bank of America shut them down. Visa shut them down. They were doing nothing illegal, but due to the political nature of what they did, they realized that financial censorship is a reality. WikiLeaks, it was trying to really push forward the conversation around censorship and the ability to even the playing fields and hold governments accountable. They experienced financial censorship, but Bitcoin allowed them to continue. And then Wikipedia was one of the very first corporations. And then Microsoft decided to have a brief play, but they tried to use it as a medium of exchange. And unless you suffer censorship, it becomes pretty hard to do treasury management. And so really, this is when the whole store of value concept, where people started to realize a third use case is not just the ability to own your own money. It's not just the ability to spend your own money without censorship. It's actually to combat governments destroying their currencies through excessive money printing as we shift from capitalism more to communism, which is a trend that we're experiencing that was hyper accelerated by a couple of trends. The first one was after 9/11, the laws were implemented to remove all privacies and freedoms and reverse those the right to privacy. And then more recently with the pandemic, it's been used in order to reverse all the trends around privacy again. So we've had this reversal of the movements around freedom of speech and the things that make human society, and now the removal of privacy because of the solutions that they have to have in order to the pandemic. And then the pandemic is, we've got to spend so much money. We destroyed our currencies. Monetary policy is gone. We no longer have those tools. You have these artificial intelligence, you have central bank digital currencies, and you have the removal of privacy that comes in this perfect storm. And so therefore you need to print as much money as possible. And then you have to really reach the outcome that I talked about in the book that I wrote, the very first published book in the world to include Bitcoin, Bank to the Future, Protect Your Future Before Governments Go Bust. You start to see the trends where you move towards 100% tax and a movement from capitalism to communism. And because the wealth inequality is so big, you have this disparity where people demand communism. They demand socialism because the rich are getting richer, the poor are getting poorer. It's dressed up as if it was capitalism failing, but it's actually central bank policies that are driving up the price of assets by not allowing markets to correct themselves in a free market. But at Bitcoin, everybody got to front run Wall Street because Wall Street is in last. They got to front run the hedge funds because hedge funds was in a bit earlier. And so really it was when you had Michael Saylor come along, and Michael Saylor did this incredible job of helping corporations understand after the pandemic that you need to protect yourself from this melting ice cube called the dollar. And he more recently had a conference where tens of thousands of people of corporations were all trying to figure out how to put Bitcoin on their balance sheets. And so MicroStrategy, this company, go and admit it, you'd never heard of it. A public company, I'd never heard of it. A public company that all of a sudden became relevant for the play that they had in Bitcoin. And so now these public companies are all coming along and saying, well, I'll take some Bitcoin, and ended up buying billions of dollars and front run all the other corporations, bringing us to pretty much where we are today now, where Michael Saylor has done such a great service. PayPal suddenly got along and said, well, we've got to get involved. Look at Cash App, look at Square, and then suddenly PayPal becomes this ginormous increase in their business as a result of supporting Bitcoin and providing. And now Visa comes along and say, maybe it's not blockchain, maybe it's Bitcoin. We've been pushing all this blockchain, but now maybe it's Bitcoin. And then finally, it comes full circle to where we are now, where Tesla comes along and says, it was obvious in hindsight. Maybe we should have had some of that on our balance sheet. And so Elon Musk, and then we have these worlds colliding. I am a Tesla owner, a big fan of the company and the mission. And we have this collision. Now, a few months back, I think it was a few years back, I was talking about the play, how we would need someone like Elon Musk to come along and really innovate the intersection between proof of work, the intersection between proof of work and the incredible amount of innovation that's happening along organizations like Tesla. And I really look forward to seeing that. There was a couple of things I was talking about. It absolutely petrifies me, the thought of the integration between ransomware and self-driving cars, that someone could take over your car, ransom you if you can't pay them. But, you know, this artificial intelligence that Elon is so fearful about, of where it takes us as human society. And when I was tweeting about the play between Tesla and Bitcoin, everyone was tweeting me saying, "Oh, but Bitcoin's so energy efficient, and Tesla's changing the world and increasing the environmental efficiency." I was saying, well, they could probably do something really interesting around proof of work. So I really look forward to seeing maybe the innovation that can happen in the hardware side alongside that. So I think it's just an incredibly interesting time. And then it brings us to where we are today, where Tesla says, let's put $1.5 billion on our balance sheet because we need to protect the dollar. So where does this go next? Well, now we're in a situation where everyone was giving us FUD a few years ago in the bear market, when everyone could have dollar cost averaged in. The perfect opportunity to dollar cost average in. Don't worry, there'll be more. There's no doubt about it that we might get. I remember I was always talking about how I expect my $100,000 Bitcoin to crash to $30,000 at some stage. Maybe the institutions won't let that happen, because right now we're in a situation where Cash App and PayPal they are buying, and Grayscale, which is the alternative to the exchange traded fund, because the SEC is not allowing retail in. They're just allowing accredited investors in, so only accredited investors can get in in their pension. They need to let all the accredited investors get in so they can front run the ETF, because the SEC is saying, no, not ready for retail. Let's let it become more of a median of exchange and unit of account, and act more like gold, where it doesn't increase your wealth. It preserves your wealth more like gold does. Then we can let retail come in through this ETF. Then we can let the pension come in. We'll let the accredited investors get in first. But now all of these public companies are putting it on their balance sheet. Really, the Standard & Poor's is becoming, a bit by bit, a play and an ETF on Bitcoin, because the regulators were dragging their feet as more and more of these public companies add it to their balance sheet. We're already reaching a stage where all of the mined Bitcoins are being sucked up, which means that those anti-Bitcoiners were always pushing that when the new Bitcoins get mined, they're dumping them onto the market. Well, now they're OTCing straight into companies. There's a reason for that, because when I was mining Bitcoin back in 2013, there was a demand for virgin Bitcoins. And so you would pay a premium for Bitcoins that came straight from the miners. The reason for that is because when you have to comply with anti-money laundering regulations, you need to ensure that the source of those funds don't come from illicit activities. And so because Bitcoin has a history, and because it has a blockchain, it could have been in the past, many years back, past or Silk Road or various other things. And so corporations and companies that were trying to get into Bitcoin, they wanted to be able to have clean Bitcoins that hadn't been through any of these activities. So they were willing to pay a premium Bitcoin for virgin Bitcoins from miners. But because they were, back then, there weren't too many of those institutions. There were just a few of them. But now those institutions are sucking up all the Bitcoins, which means that they're not even hitting the market. So it's only the Bitcoins that are on the exchanges right now that people are transferring, that are able to circulate, which is driving the price up, because the demand for money that you can own, the demand for money that you can spend, and the demand for money that can't be diluted by central banks is only increasing as the individuals got in first. And now the corporations get in next. And then the hedge funds got in just before the corporations. And now you're looking at governments that are allocating some of their electricity, as I advised them 5 years ago when I spoke at the first Isle of Man conference, which was the first government. That was 7 years ago. When I was guiding governments to allocate some of their country's electricity to mining Bitcoin. and you have an asymmetric bet during currency wars so that you can accumulate. And when the currency wars happen and we have a real shift in power, where the dollar actually starts to have a shift and everyone's moving towards gold like China is right now, and Russia is right now, trying to accumulate as much gold on their balance sheet and create corridors that go round the dollar, and create ways of onboarding into gold and oil that go round the dollar. Then you want to have as much Bitcoin on your balance sheet so that you can announce that you're having it as a reserve currency. Then you create an asymmetric bet, just like Bulgaria that stole a bunch of Bitcoin from a criminal enterprise, ended up with enough Bitcoin that it was bigger than their entire national debt. But guess what? Because the custody services and the ways of governments and corporations holding Bitcoin didn't exist, they disappeared in corruption into the bureaucracy of whoever stole those Bitcoin and left the country still crippled with the debt, while the Bitcoin went into whatever force that went into. So now what's happening? What's the difference? Well, the services now exist for corporations to onboard. And Michael Saylor, through his conferences, is helping institutions get on board into Bitcoin now that such services can exist in secure ways, and the custody exists for now secure ways of doing that. And so now the corporations are trying to front run the institutions as the ETF and the exchange traded fund comes through. Then the pensions can actually get some of the action. And so finally you get some of the doubters like the Ray Dalios, the Paul Tudor Jones that came along and said, I'll stick some of that in my hedge fund. And then the Ray Dalio, the greatest hedge fund manager in the world, now writing, well, I know that everyone was reporting I was saying bad things about Bitcoin, but hey, I'm not really an expert, but here's an interesting thing. And here's what my firm are doing with Bitcoin. It's one heck of an innovation. So they gradually move through until eventually we just have the last two people standing, a race between Warren Buffett and Peter Schiff to find out who cost their investors the most amount of money. And I think Warren Buffett may capitulate before Peter Schiff does, because Peter Schiff is taking it to his grave, that this is tulips, that this is a Ponzi scheme. And at some stage, we have to see how much Peter Schiff's investors lost because they listened. And then as more and more corporations come through. Now, no doubt when it crashes for the next time, because Bitcoin's a wild ride, and you want it to crash. You certainly don't want it to go up. And these things happen really quickly. But I just really interesting that for the first time in human history, we have a product that front runs Wall Street, that front runs the institutions, that front runs the corporations, that front runs the governments, that front runs the central banks. And the very last people standing will be the Federal Reserve trying to hold on to their dollar policy as they shift into modern monetary theory, just like I talked about in the book, Bank to the Future, Protect Your Future Before Governments Go Bust. And Peter Schiff, who ironically had so much right, forecasted the financial crisis, forecasted the Ponzi scheme in banking, understands that, but is really trying to push that we're in a gold standard and they need to shift to a gold standard. Something that is practically impossible because under the new rules of finance, if you move to a gold standard, you'd collapse the entire system. If you raised interest rates, the amount of wealth inequality that would be pushed, because you can't reverse this now. We are in the world's largest regulated Ponzi scheme in history. And the only way in, from my perspective, is individuals need to protect their wealth by owning their own money, spending their own money, and protecting themselves from the excessive money printing. Corporations need to do the same. Governments need to do the same. And central banks need to protect themselves. And in that process, you will have lots of people trying to tell you, Craig Wright's going to come along. He is Satoshi and he's going to sell all his Bitcoin. The SEC is going to take it all down. regulations, governments, IMF, everyone's going to come and take it all down. Bitcoin's going to get banned. It's a Ponzi scheme. It's tulips. And you're going to create another opportunity for somebody else to purchase and acquire the rarest digital, scarce, sound money that has ever existed, because it is not yet a store of value. It is not yet a unit of account. It is not yet a medium of exchange. And the day it becomes a unit of account, a store of value, and a medium of exchange, the opportunity to get on the right side of the wealth effect disappears. So congratulations to everybody that got involved at different stages. And we are still at the early stage, because it's still at the stage where, as long as Peter Schiff continues to tell people it's tulips, it's a Ponzi scheme, it's a currency just for drug dealers, there will be people that listen. And that creates what I think one of the most interesting times in financial history. Now let's take your questions. And if you enjoyed this content, please do like, please do share. I will keep giving you as much content as I can to try and keep you on the right side of this incredible wealth effect that's happening, on this incredible time in financial history. And I really do have sorrow for those that are experiencing one of the worst times in financial history, because they're in the wrong side of these debt cycles. They're in the wrong side of this wealth inequality. They're on the wrong side of this world largest regulated Ponzi scheme called fiat currency. They're on the wrong side of this wealth inequality that's being driven by 0% interest rates as these currencies shift into currency wars. And I want to make sure that you're always on the right side of that trend as much as I can. So please do like, please do share, please do subscribe. And as everything unfolds, I'll keep doing what I've been doing for the last 10 years, keeping you on top of those trends. So what we got from the audience? How many people have we got on the live?
We have, let's see, we've got about 643 people watching.
600, awesome. Should be more.
Yep. And so the first question I'd like to choose is, do you think Elon Musk is really a benevolent actor in the space, or is this more sucker news for retail?
No, I personally believe that Elon Musk is late to the table, but still early to the table. It's a no-brainer for one of the wealthiest people in the world and one of the now wealthiest organizations in the world to take some of their funds and protect it with Bitcoin. Why wouldn't you? But no, I do think that he's somebody that was late to the table, thought that it was obvious, and has now got on board. Rectify his mistake. Next question.
Okay. Will regulators make life difficult for corporations that buy Bitcoin?
Regulators will make life difficult for every financial institution, because that's by definition their job, is to give them oversight and make sure that they're doing things with the right process and they're not putting retail investors under unnecessary risks. By definition, their job is to give oversight and ensure some of those things. But that's where it becomes really interesting, because it's so difficult for a corporation to get in, to do the custody part, to do to get the processes right. It's, because Bitcoin was designed for the individual, not for the corporation. That's why it's very tough for them to get in. And so as they're all scrambling, you get this situation to front run, as it were. But yeah, of course, regulations will make it difficult, because think about what regulators, what are things that governments care about, and don't confuse regulations with government. Well, governments want the next money grab, and the next money grab is taxing crypto wealth. So they have a whole load of people that got wealthy, where they want to subpoena all the exchanges and get all the data from all the undeclared Bitcoins. And so they're invested right now. The government's invested It's their next tax grab. If this goes from $1 trillion market cap to $10 trillion market cap, that's where they get their next set of tax collection. So they want to get as much KYC data as they can. And that's why they will regulate the financial institutions. They can't regulate Bitcoin. There's no door to knock on. But I also think that they will definitely put together as much processes as they can to ensure that they implement investor protections as regulators for public companies. But the great thing is that we built the infrastructure. We've been investing in the companies, from way back in the beginning, and it's taken this long to get the infrastructure there. But the infrastructure is now ready. So that's why it's different. It took us a long time to get there. And congratulations to all those investors that built those equity portfolios and all those companies that have built this infrastructure. And now we get Coinbase, one of our portfolio companies. The whispers are $70 billion market cap on the public markets. This is really, really interesting time to see where all these equity valuations are going now as the entire financial system gets rebuilt. Next question.
Okay. What's your recommendation if Bitcoin becomes illegal in a country? Move, or is there something else less severe?
If Bitcoin becomes illegal for you to own it in your country, I can't really advise you to move because that depends on how much Bitcoin you have. If you've got a lot of Bitcoin and Bitcoin becomes illegal in your country, then if you've got a tiny bit of Bitcoin, then you're probably going to wait until it actually gets worth something. And it depends on the execution of that. Again, what does illegal actually mean? Does it mean that they make it illegal for you to spend your Bitcoin, illegal for you to hold your Bitcoin? Any country that does that, I'd want to be the hell out, because that's a country that's moving in the wrong trends, making some really stupid moves. We've seen that story before of what happens when governments try to do that. It doesn't really work in their favor, and they end up reversing those trends. And then other countries come along and create friendly environments, and they get all the data, and they get the tax grab. So it's game theory now. So I don't see many countries doing that. There will be some countries that will give it a go, but every country that's tried to do it, they've ended up reversing that when all the tax grab goes to another country, or the data goes to another country. And then they realize that actually this is something they need protection for as well. They don't want it to be illegal for themselves. If you have a significant position in Bitcoin and it looks like your government's going to try and make it illegal, then I would be getting the hell out of that country. That's not something I want to be around. I wouldn't want to have to give up all my Bitcoin, because when they made gold illegal in the United States, they made everybody shop in their gold for about $35. I think the original was $22 for the convertibility. And what is it now? 17, 1800. That was a pretty good bet for the government, really bad bet for the people. And I think that could be a disastrous bet if they're going to make you hand in your Bitcoins and exchange it for some melting ice cube, world's largest regulated Ponzi scheme, fiat currency. Okay. Next question.
I read your book, thank you, but I didn't fully understand how we can transition from a debt-based system to a savings-based system. Can you talk some more about that?
Yes, so a debt-based system is a system that we have right now where every time banks issue a loan and you borrow in order to acquire some real estate or property.
Sorry, Simon. I think for those who are new to this channel, they probably aren't aware of your book, so it might be a good time to plug in where they can get that book. And
thanks for reminding me, Azad. So I will answer that question, but yeah, the plug, and don't worry, it's not going to cost you anything. My publisher has never paid me any of the royalties due to me, and that was the very first book in the world that was published to include Bitcoin. It was published I started writing it about the same time as Bitcoin in 2000, and in 2010 I started. It was published in 2011, and early 2012, and he's never paid a royalty. And so I decided that my only way to combat that, because he disappeared, is to give it away free. So if anyone would like a completely free copy of the book, you can get the digital copy. Go to, you see the URL in the signature strip, retirementplanb.com, but do /book. Azad will put it in the description and the chat. Go retirementplanb.com /book, and you can get a free copy. You just need to enter your name and email and create a membership portal. You'll also get the 4-part free video series on building and protecting your wealth in the Great Depression of the 2020s as a gift as well in that membership site. So enjoy that. And let me know what you think. All I ask is if you read it and you enjoy it, leave a review on Amazon. That really helps. Yeah, the question. What was the question, Azad?
Let me say that again. They didn't fully understand how they can
transition. Got it.
From a based system to a savings-based system. Can you talk a bit more about that?
Yeah. So the way that money works at the moment is every time you borrow money from a bank, they issue a digital representation of the government's currency. So they create a digital dollar. They invented digital currency. It wasn't Bitcoin. Before Bitcoin, you had the digital dollar, the digital euro, the digital pound, and it's backed by debt and created by a government every time they issue a loan. And so 97% of the money supply is created privately by banks, and it's crony capitalism. It's not a free market form of money. You have to have a banking license to create it, and you have to clear directly into the central banks. And it's almost like a oligopoly cartel as opposed to a free market form of money. But it's one step removed from the government, because governments have created money over time. This creates what I call the world's largest regulated Ponzi scheme. And so the inevitable consequence of this is you destroy the financial system and you destroy the currency in the end. And so eventually governments will probably take back control of money. But what I didn't know at the time was that they would invent a new technology called government-backed digital currencies or central bank digital currencies, because they copied the innovation that Bitfinex created with stable coins. What they can do is allow banks to go bust. And then rather than having this deleveraging of the economy because you've destroyed the money supply if you let a bank go bust, like we saw in 2008, where taxpayers have to pay it, you can just let the banks go bust, and you can replace it with government money or central bank money. And it could be a central bank digital currency, so that you as an individual, rather than losing your deposit, you go to the central bank. Now, this isn't inflationary or deflationary. It's taking debt-based money and replacing it with non-debt-based money. But the interesting thing is you can just have one money supply then. You don't have to have M0, M1, M2, M3, M4, which is how much money is created at the bank, how much money is created at the central bank, how much is cash and coins, how much is bonds and different financial products. You can just have M. And this can be fully transparent. And so you can see exactly, rather than trying to manipulate interest rates and use monetary policy in order to decide how much digital currency the banks create, you can transition to one fiat currency, and you can judge a government a lot better by this way. You can judge a central bank because there's more transparency and you don't have to use shenanigans in this. But it takes away all the freedoms, privacies, and liberties and drives you more closer and closer to modern monetary theory, algorithmic, artificial intelligence-led monetary policy, where eventually banks just become algorithms as we move to a more AI-driven economy. And so if you replace debt-based money with debt-free money, you have transparency. You can see if they create inflation or deflation. You can inject money into the market, uninject money into the market. But as long as you have competing and you allow private forms of money, i.e. Bitcoin, as our world's best shot, and money that you can own like gold, that acts as commodity-based money, and the digital representation with Bitcoin, then you have competing money supplies where people can use fiat for what it's good at, which is stable short-term value, medium of exchange, units of account for pricing, but you don't touch your savings with it. And the governments they don't want you to save. That's all their monetary policy is about, stopping you from saving and getting you to consume and spend. But then you can use your savings in other forms of real forms of money rather than currency, like gold and Bitcoin. And so I didn't know that those trends were going to play out as they did right now, but they did end up playing out. And so by removing and making it illegal for banks to create money, in this phase, you can just replace them if you let them go bust. Then you remove central money creation as to API and technology led, as I talked about the 7 disruptive technologies in the book. Then you can just have a form of money which is fully created by either a government or a central bank. And you can have it way more transparency and accountability. But the important part is you don't take away everyone's freedoms and privacies, because that's what governments will do with that money. Actions like the IMF and the Bank of International Settlements and the World Bank. And I guess that we're working with them on building, and I'm doing it with them live. And we're just really focused on giving them exactly what they paid for, setting up their structures, setting up everything, and just being able to see exactly how I'm building my pension using what we taught in the 4-part free video series. We haven't really thought beyond that. So once we've thought about servicing those customers, we can look at what's next. So if you want to be notified, then head over to retirementplanb.com/sign_up, I believe, or watch the 4th video and it will give you a link. And you can enter your details in there and we'll notify you if we go live again. But we're focusing on servicing the customers that did it. And then we'll start thinking about what we do with the next round of people. But we're just getting all the feedback right now and making sure it's the best. If anyone's on the live chat right now and they're part of it, let people know how you're finding it and what you're thinking about it, because we're having a blast. Yeah, we're really enjoying building that.
All right. A few people think that you're actually the real Satoshi. Thoughts on that, Si?
I can't code for shit. Yeah, if you, I'm definitely not the I won't take that one. I'm not going to do a Craig Wright. I'll definitely get caught in that lie if I ever tried to make that lie. But yeah, I'm a useless coder. I would never be able to come up with something like that. I'm a finance guy that found technology, not a technical guy that found finance.
I think let's try this. These 2 questions, put them together if possible. What other Bitcoin catalysts do you forecast for 2021? And many are thinking that a crash of Bitcoin will happen, taking it back to 10K with the drive of corporates adopting Bitcoin.
Please, that would be fantastic, because I'd love for more people to get on board. Traders get wrecked. Trying to forecast the short-term price of Bitcoin is a loser's game that's cost people that I've known that have been in the highest performing asset class in history from the last 12 years. We're in one big bull market, and it absolutely crucifies and punishes traders. When you trade Bitcoin, you have to pay tax. You have to sell your Bitcoin to pay your tax. You create taxable events. It's a loser's game. When I was a market maker, 90% of people lost money trading to the 10% of insiders. And Bitcoin is so manipulated short term, by the insiders sending money over to the exchange and the whales, just like every single financial market. So don't focus on the short term, but you hope and pray that you get the opportunity to accumulate it all the way down to 10,000. But most people won't. They'll buy it at the highs and then they'll try and trade and then they'll sell it at the lows and capitulate out. That's just the way these things work. So I don't give short-term price forecasts. My forecast and my advice is the following. Bitcoin either succeeds or it fails. If it succeeds, there's a supply and demand effect. The demand for people to own their own money, spend their own money, and combat excessive monetary printing and destroying of currencies, as every single fiat currency has failed, drives the demand for Bitcoin. And as more and more people get to realize that, more and more people are not willing to sell their Bitcoin, so more and more people are only willing to sell it at a higher price. And so that's the supply and demand forces. The great thing is that so many people don't know that. And so they get scared and they get wrecked by the trading trends, and they try and trade it. And so they create all these taxable events, and they create these situations that make them have to sell their Bitcoin because someone comes along and says, Bitcoin's going to get banned, Bitcoin's going to get this, Bitcoin's going to get that. It's just a currency for drug dealers. It's a Ponzi scheme. It's a tulip. And you want some of those. And there will be fearful events that make people really, really fearful. And, and that really is a cry and shame for people that fall for those types of things because they haven't grown the conviction yet. It's an asymmetric bet. It either succeeds or fails. And the fear of people losing their dollar is because they're not thinking in terms of money. They're thinking in terms of currency. They're still trying to accumulate as much currency. And the difference between currency and money is that currency is designed to go down in value over the long term. Dollars, euros, pounds, Japanese yen, Chinese yuan, all of it is designed and engineered to go down in value over time. Money is designed to maintain and preserve your wealth. Gold is the only form of money that's stood the test of time. But Bitcoin's a speculative store of value, which means that as more and more people start to realize that there could be a digital version of money that has many of the, if better, forces of owning your own money, spending your own money, and the ability to combat the dilution of money through the increase in its supply. As more people realize that, that creates the asymmetric opportunity. It will eventually, I believe, if it succeeds and continues to succeed, which I believe it will become a unit of count, median of exchange, and store of value that preserves your wealth eventually. But we still got a long way to go until that happens. So I believe that if you're thinking in that, you're thinking in terms of accumulation of currency. And if you're thinking in terms of accumulation of currency, you haven't got what money is yet. And I really do suggest, if you haven't watched it, watch that 4-part video series on the Great Depression of the 2020s and how to build and protect your wealth. But yes, we will get corrections. We certainly will. I look forward to them. I don't know when they happen because I'm not, I don't deal with these short-term manipulators. And I don't think you should either.
Okay.
Question, Azad.
We got one more room for one more question. Yeah, I think this one's quite important. It's a good one, I think. Anyway, Simon, why do we always measure Bitcoin with dollar and other fiat currencies? I mean, if the fiat inflates and loses value over time, then Bitcoin keeps getting higher in fiat value. What if fiat goes to zero? How do you value Bitcoin at that point?
A fascinating question. So I don't believe that fiat ever goes to zero because old currencies get destroyed and they get replaced with new ones. So I do believe that there is a place in the world for fiat currencies. They are very good because they create a unit of account in the way people think. Global currencies, even gold, has been around for 5,000 years, but people find it psychologically very hard to measure how much does my bread cost in gold? How much does my milk cost in gold? But fiat currencies are very good for you managing your financial affairs short term as a unit of account and median of exchange. They've got 2 decimal places. Bitcoin's got 8 decimal places. And so the fact that they go down in value over time relative to other assets makes it ideal because people try and spend it and they want to increase the velocity of money. It's a concept in economics, increase velocity of money. And so they can use that, and because they can control it, they can try and affect employment. They can try and affect economic growth and the things that governments feel is in their manifesto to do. So I don't think fiat currencies go to zero. They just get replaced with new ones. And that is the history of that we have seen. So that is preparing for an event that I don't think happens. But let's play the thought experiment. Then you have money priced in money, and gold would be the ideal unit of account and median to actually do that, whereby you can price Bitcoin in gold. I've actually invested in companies like Voltoro that have gold to Bitcoin exchanges that were trying to create that intersection between gold and Bitcoin. And so that is the default unit of account if we entered that theoretical world where there are no fiat currencies. But I don't see that happening. You have currencies that be destroyed that will benefit other fiat currencies. And I do believe that the world is net better off with fiat currencies, but you need to have sustainable fiat currencies where people understand what they're for. And that was, kind of the world that I tried to talk about in that book, that just appreciate and understand what fiat currencies are for and what they do well, and not what they do really badly. So, Azad, thank you very much for picking out those questions. Now we got to the end. If you enjoyed this content, please do give us a like. Please do share it. I would like as many people as possible. I'm really stoked that we've gone from 6,000 to 60,000 subscribers in such a period of time. But I'd like it to go from 60,000 subscribers to 600,000 subscribers. And that's not going to happen without your help. The YouTube algorithm, they sometimes shadow ban us. They sometimes play with all sorts of shenanigans. I had to have about 3-4 weeks where we couldn't go live because some of the videos. But if people like it, if people share it, that seems to keep us protected. That seems to get us here. And that seems to, as we're not discussing things too controversial, do that. So that's my request for you. I will keep creating this content. If you give us that like, if you help us get from 60,000 to 600,000, just like you got us from 6,000 to 60,000. Thank you very much. We will be live this time next week. Let me know either on Twitter or in the comments section what you would like me to cover as the topic for next week's video. And we'll have a discussion around that. Tweet me at Simon Dixon Twit. If you'd like a free copy of the book, it's retirementplanb.com/book. But always remember, you are alive at one of the most interesting and exciting times in financial history, painful for some, amazing for others. And I'd like to keep you on the right side of that trend.